Ever seen a stock just suddenly ignite? Goes from being this quiet performer to suddenly the talk of the town, like overnight.
Oh, yeah, absolutely.
1 minute is trading for pocket change, the next it's just rocketing higher. Everyone's watching.
That's the story with wearable devices, WLDS.
Exactly. And today we're strapping in to figure out, does this rally have fuel left? Or is this rocket about to fall back to Earth? Welcome to D-Risk, a podcast where we provide a no-nonsense analysis of stocks. Our deep dive today is into ticker WLDS, based on our research data captured on September 11, 2025, as of 8:28 a.m. ET. Just quickly, the broader market context, well, pre-market futures look cautiously optimistic.
But there are whispers, right? U.S. slowdown versus a slight global growth upgrade.
Right, and we've got inflation data dropping later today, so that could definitely cause some turbulence. Okay, let's unpack WLDS itself. Wearable devices. They're building something that feels like the future, really.
Controlling devices with finger movements.
Subtle ones. I think Minority Report, kind of, but, on your wrist.
Gotcha.
And yesterday, they dropped a bombshell. A major U.S. patent.
For their voice and gesture control tech. That was the catalyst.
Totally. And this isn't just paper. It's a huge validation of their IP.
Yeah.
Puts them right in that AI augmented reality space.
And didn't they also expand recently? Military, Japan?
That's right. So, yeah, a lot of positive news hitting all at once.
What's fascinating here, though, is how all this great news clashes with the fundamentals, specifically that pre-surge fair value analysis from our research.
You said it.
Overvalued, even before this massive jump. So the stock was arguably already pricey.
Interesting. So the numbers versus the story.
Exactly. I mean, you've got staggering revenue growth, over 500%, which sounds amazing, but they're still operating at a net loss. And negative free cash flow, bleeding cash.
So it's that classic Wall Street showdown, potential versus current reality.
Precisely. Are you valuing the dream, the potential revolution, or the current financials? That's the tension for you, the investor.
That's a powerful story against those financials.
Yeah.
So how did the market react? I mean, was it just hype or real belief behind that surge?
Well, looking at the sentiment data from our research, it's pretty clear. Short interest is tiny.
How tiny?
Like 0.46%. Minuscule. So almost nobody was betting against it.
Okay, so yesterday's rally wasn't a short squeeze forcing cover.
Yep. This looks like a genuine old-fashioned buying frenzy. Pure excitement over that patent news.
Wow. That really does show conviction. But okay, this raises a big question about the technical picture, the chart.
Yeah, it looks less like a stock chart and more like an EKG during a heart attack, right?
Seriously, that kind of volatility. You need a strong coffee just looking at it. What actually happened on the chart?
Well, it was explosive. That year-long downtrend, completely shattered yesterday, gone.
And a volume.
Monumental, huge volume surge, which confirms serious conviction from buyers. They weren't messing around.
Okay, that sounds bullish. But there's always a but.
There is. A critical warning flag from our research. A key momentum gauge, measuring the speed of the price change. It's flashing bright red.
Meaning?
It signals the stock is extremely overbought, like stretched way too thin, too fast. That often means a pullback is coming, short term at least.
And the volatility you mentioned.
We're exploded, which means massive price swings, up or down, are very possible now. High risk. So putting all these pieces, the patent, the weak financials, the market frenzy, the overbought chart, putting it together, our research outlook is cautiously bullish.
Cautiously bullish.
Okay.
Let's break down the risks first. Number one, that chart screaming overbought. A sharp pullback seems probable, right?
Highly probable, yes, in the near term.
Two, the fundamental valuation was already stretched before this huge run-up.
Correct. The story got better, but the starting price was already high.
And three, that inflation data today.
Yeah.
If it's bad, it could sour the whole market mood, couldn't it? Drag everything down.
Absolutely. A market headwind is a real risk for any stock, even a hot one like WLDS. But if we connect this to the bigger picture, the reason for optimism, even cautious optimism, is pretty strong.
Go on.
That foundational patent for future tech, that's not just a headline, it's a real, tangible asset. It changes the narrative long term.
It has concrete value.
Exactly. And the market's reaction with that huge volume shows real belief that this innovation could genuinely reshape their sector. It's a bet on that future, despite today's losses.
Okay, so for folks watching this closely, what are the key levels our research flagged? Support first.
Key support to watch and really needs to hold is between $5 and $5.20.
And if that holds, what are the targets?
Upside targets are initially $7.40 and then looking back towards yesterday's peak, which was near $10.90. But, and this is crucial, our bullish thesis gets invalidated if the stock closes below $5.
Right. A close below $5 would signal yesterday was maybe just a one-day wonder.
Precisely, that the market isn't actually ready to sustain this new higher valuation.
So there you have it. Wearable devices. WLDS. It's just a fascinating story, isn't it? Innovation meeting speculation head on.
Definitely a high-risk, high-reward play.
Yeah, you might need a neck brace just from watching the chart. As WLDS continues its wild ride, the bigger question for you, the listener, isn't just where this stock goes next, but maybe what its journey tells us about the market's appetite right now. How much are we willing to pay for pure innovation, for that next big thing, even when the balance sheet isn't quite there yet? Is this the future or, a familiar cautionary tale? Something to think about.
That's all for this episode. Remember, this podcast is for informational purposes only and isn't financial advice. Do your own research or consult with qualified financial advisors before making any investments. Thanks for tuning in. Catch you in the next episode.